Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in, take a look, see what is going on today. If you want to follow me at Finance, and if you want to join our community, finding-value.com, that's where I dive deeper into all of these topics, looking for potential investment opportunities, sharing that with everyone in the community, also covering a lot of different topics, looking at the fundamentals of some of these sectors, looking at the technicals. I look at everything, guys. I use everything in my power to give me an advantage. That sounds like something that you want to learn or be a part of. Definitely sign up. We've got a discount coupon code. It is called discount. Put that in the coupon code and save yourself some money. So, home loan bill, choose your champion. The metrics that I look at. It is residential building construction. Let me lower this just a little bit here. Okay. Residential usually in contraction well before a recession hits. Keep hitting new cycle highs. Up, 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 up. This is something that I watch as a leading indicator for a potential recession, and it continues to go higher. Then you look at this guy who's been calling for a crash before 2020, after 2020, in 2022, 23, 24. He's been calling a crash every single year, probably since he's been posting. So it says home builders are signaling a recession warning for the US economy. There's only been five other times in US history where home builder inventory has been this high relative to sales. Then he shows 74, 81, 91. He shows areas where we had absolute inventory gluts of existing homes. I've looked at all the data before. We don't have a glut in inventory homes right now, existing inventory. Now, could this slow down home builders? It could. Yeah, it could. So, one of the things that you want to look at are the home builder stocks. It's actually one of the indicators that you can see given history. So, I'll put this as a line chart. We had a huge breakout. So, we had a consolidation from 1981 all the way to the breakout of 1991. So we consolidated for 10 years in this home builder stock, Lennar Corp. We broke through that high in 1991. 1990 was that recession. We overbuilt. We broke out and went to an all new level, all the way up to a shoulder, head, shoulder topping pattern. Guess when that was? It peaked in 2005. It rolled over in 2006. And then the crisis was in 2008. The crisis was the head of an inverted shoulder, head, shoulder bottom. You could have bought this at $6.86, same as 1997, and rode it all the way up. We're at $134 right now. 134, and you could have bought it at 6 at the bottom of 2008. From this cycle, this was the cycle low in the real estate market. And we are going up, up. We broke out of this last resistance area, did a back test in 2022. This is when all these crash guys were rubbing on their hard-ons over here. And let's just say it's tough to do that because they were so small there. And now we're heading higher in this uptrend. This looks very similar to this. And we could go for a while to the upside. I don't know how the big picture eludes them. I don't get it. The data at 3.8 months of existing inventory is incredibly low. In fact, you can go all the way back to the 1970s. We haven't had inventory of existing homes that low anytime during this entire period. Zero. But let's look at just the new home build data, have a completely jacked view, and call for a crash. Now, is it possible that we get a tech recession or something like that at some point? That is possible. If interest rates go up enough, it'll create a headwind, but that interest rate going up, it has been, at least historically, been driven by the real estate market creating credit. There is a possibility that interest rates are moving up from a debt crisis. which is it's a different dynamic. And that could impact the home prices, but it's not because of the things that Nick is looking at, in my opinion. Nick is this guy here. Jorge, I think that's how you pronounce it. 4-week average US crude oil production is lower than last year and declining. Here's the decline, and it is lower than last year. We'll see what happens here in US crude oil production. Mark or Mev Faber says, "What a chart! The lost century in bonds." So here's stocks, and you know what's even worse? If you take real inflation data and you look at the long-term historical return of the S&P 500, some people say that the S&P 500 doesn't go up; it just accounts for the inflation. And what you're seeing here is the difference in the accounting of the inflation from 1924. So 1924 was, you probably had some real gains back then. We were on a gold standard. But from 1970, it's pretty questionable because they started playing with the numbers in 1980 and onward. And bonds, 10-year treasury bonds, you made 7 cents. Hey, I'm clapping for you guys. Good job. Let's go buy some bonds. That sounds real smart. Sahara. So we've got uranium. A uranium update pulling back after spiking into the gap, maybe looking for a back test of the bull breakout, which wouldn't surprise me, as here is exactly what we find here. So again, guys, I look at this from a big picture view. This is your pullback all the way to where this bottomed. I don't know if that was, maybe it's 2020, 2016, whatever it is. It bottomed and now we're going up. We're creating higher highs, higher lows, and people are getting scared out of it. Like, oh my God, this is, it could go down. And I'm just looking at this like we just broke out of the big pattern and we're doing like a back test or something. This here is a super cycle. A lot of people on Twitter, they respond, how's that super cycle going? Well, guys, we're creating higher lows and higher highs. That is the super cycle. You're in the middle of a super cycle and you're crapping yourself because uranium doesn't go up every other day. So I think that we're going to go way higher by the end of the bull market in uranium. And the whole thing that you want to do here is you got to be able to hold on. You can't second guess the bull here. If you're a bear in the middle of a bull market, I mean, that's no good either. You got to believe in this bull. You got to believe that we're going higher, that we've got higher highs and higher lows, and that we are coming. We haven't, this is what's ridiculous, guys. We haven't even shifted where precious metals like gold are in an outperformance trend against the S&P and the NASDAQ yet. It's going to come. And then when that starts to rip, this is going to go vertical goose. It's going to go into stage 2 and it's going to go way up. And then people are going to be chasing into this, the FOMO stage. We're in the disbelief stage still. No one believes in this bull market. No one believes we're in a super cycle. No one believes in anything. And I'm sitting here since 2020. I'm up hugely from the bottom. I'm continuing to purchase and I'm riding through volatility here in the short term like everyone else. But I'm not selling my shares. I'm accumulating these things. We haven't seen any of the big moves yet. And people are already saying that it's all done and over with. Disbelief base, guys. Disbelief. Here's a summary of the Fed decision. Fed leaves rates unchanged, pausing the Fed pivot. Decision to halt cuts was unanimous. 12-0 vote. Fed says inflation remains somewhat elevated. No way. I would have never guessed that. Fed says unemployment has stabilized at a low level. Statement on progress towards 2% inflation removed. The Fed seems to be aware disinflation has stalled. The battle against inflation continues in 2025. It's not going to continue, guys. Inflation is going to rip. Oil is going to go way up. The interest rates will chase oil, and that's just kind of the cycle. Now, is the slowdown behind us? I don't know. Is there a little bit more slowdown ahead of us? It's tough to say, guys. When you're going through it and they're jacking with all the numbers, I know people are wanting to buy even cheaper. All I'm going to say is if something's cheap, I buy it. If the chart looks good, I buy it, and then I hold on. And my conviction in the cycle, my conviction of higher lows and higher highs in the bull markets that we're seeing, The breakouts of the consolidations, like in oil, even in uranium there that we were looking at. Just hold on. I mean, it's boring. Investing is like watching paint dry. It's not that great. And you just sit there and do nothing. And everybody wants to do something. They want to make money immediately and they want to swap their positions. It's not how you make money. It's just not how you do it. Christine Guerrero says higher tariffs will hit metal products, tubing, drill pipe, casing, new pipelines. Shale is particularly exposed to this as OCTG is a top expense already. Oil tubing and all that stuff. Peter Schiff says Trump said he wants to go back to the good old days of no income tax, just tariffs. It worked before and it'll work again. The reason we could pay for the US government with tariffs was that it was tiny. If we eliminate 90% of federal spending, then we can do it. Let's do it. Hey, I'm all for it. If we can do tariffs and we can eliminate income tax, I am all for that. I am also for eliminating 90 to 95% of government and getting these people to work in producing that goods and services that people actually need. I am all for it. Let's go do it. But we can't eliminate income tax and then have just tariffs and have government run these massive fiscal deficits. I mean, that's what we have to balance. That's where we're at. Christine Guerrero says, per John, which is Hess, U.S. shale has been a key asset, but now it's maturing. You know, Occidental Petroleum, Vicky Holub also is saying that. She's saying we're going to go short oil after 2025. It's coming. It's coming. The markets look forward about 12 to 18 months. So are we at the bottom of the oil market? Probably. That's my guess. We're also coming into seasonality here in oil where it starts to turn higher after February. Our near-term oil price outlook or oil inventories draw to start the year. So once Q1 oil balances show little to no build, the consensus will look pretty out of sorts. U.S. oil inventories are starting the year on a bullish note with total liquids declining by 16 million barrels in January. This is supposed to be build months. We're not building, we're declining. It's all bullish, but nobody wants to be bullish. Hey, we've got a lot of spare capacity, apparently. It's just not coming online. I think it's OPEC versus the oil traders. And what they're going to do is they're going to say, you know what? We'll just decline the inventory levels down to nothing. Screw it. And then we'll push the prices higher. It's OPEC versus them. This is what a bank run looks like, but this time it's gold storage vault run. So Trump tariff fears expose a lack of existence of sufficient Bank of England gold inventories. If you look here, it says the wait to withdraw bullion stored in the Bank of England vaults has risen from a few days to between 4 and 8 weeks, according to people familiar with the process, as the central bank struggles to keep up with demand. There's a bank run going on here with gold. You know, this is going to be so interesting. When we start running out of this crap, like gold, silver, platinum, all these things, what do you think the price is going to be? And what's going to happen? Are we going to break the paper market versus the physical market? Is the paper market going to read like $1,200 an ounce for platinum, but the platinum price will be like 4 or 5 grand and increasing? Could this break the system here? It could. This could be the trigger between all of commodities ripping. Because what if gold moves on up massively? People figure out that they're fixing this crap, and everybody starts running at the physical. The physical is going to be gone in days, guys. Probably not even days. It'll probably be gone in hours. Probably not even hours. Probably minutes. As fast as people can click add to cart and buy. If you can change your mind on a trade, stop out and then take the other side of the trade very quickly. You are ahead of 95% of other traders. This is the stupidest thing I've ever seen. Trading, no one makes money in trading, guys. This is just a fact almost. Very few traders make any sort of money. And if you're taking a position, rotating 100% to flip it To flip the trade that you're ahead of 95% of other traders, it means you don't know anything about the fundamentals. You know nothing about the big move. I got away from trading. I used to trade back in the day, and yeah, I made some money, not ridiculous sums of money. And then I took the longer time frame approach, and now I make ridiculous sums of money. Now, in the short term, the past year, no, I didn't really make a ton. But the years before that, I made a boatload. And I have a feeling when this stuff starts to break out, I'm going to make a boatload again. That's how the big money makes their money, how the billionaires make it. And they don't go broke. I don't even know how these people trade. I mean, you're not going to trade 100% of your net worth. So how do you get any sort of movement? You can trade small amounts, but really not worth it, at least from what I've seen. Gasoline builds should run out of gas over the next few weeks. So we're about to turn over in build season to start with drawing down. And that's after February where we start to draw down on gasoline. So we'll start to get our drawdowns here. Ali says tightening of global oil markets due to geopolitical tensions, sanctions, and delayed production increases equal higher oil prices through 2025, with wide ranging consequences for producers, consumers, and the broader economy. So he's seeing higher oil prices through 2025, tightening of global oil markets. It's all coming. And that's Bank of America decided to make a U-turn and revert from expecting a surplus in oil supplies to instead of expecting a deficit. Well, maybe they did that for the presidential elections and now flipping to what is actually occurring. Who knows? I don't follow some of this stuff, guys. I think it's crap. Residential building construction, which is usually we already went over that. Here's Kevin. Kevin says gold and silver squeeze is in the making. I've been expecting this for a long time, longer than I can care to admit. Back in 2007, we had to wait 6 to 9 months to get silver delivery from bullion banks during that era. Fact is, there's piles of paper promises that can't be filled in a timely fashion. The banking establishment and along with central bankers have engaged in decades of metal price suppression, issuing certificates for gold that doesn't exist. Fractional reserve deposits is what happened. Bullion banks borrow, lease precious metals, and sell it. Take the proceeds and invest it. They cover themselves with futures contracts and with hedging contracts from producers. The result has been a huge supply of gold and silver in the market that isn't actually real. When, not if, we begin to experience a real squeeze on the precious metals along with mining cost inflation, it's going to be very difficult for shorts to cover. It will be even more difficult for bona fide purchasers that need the metals for manufacturing to get delivery. A great revaluing of precious metals is coming because of a long overdue devaluation of fiat currencies and bonds. Let's get ready for this squeeze. Now, I'm already ready for this. Let's squeeze the living hell out of it. I'm fine with that. But I'm ready for it. Um, this squeeze is going to happen, I think, in all of precious metals, all of them, platinum, palladium, gold, silver. I think it's going to happen in oil too. There's a whole bunch more paper contracts and oil floating around than oil itself. It's all going to get squeezed. All of it. Giovanni says large draw for U.S. refined products last week. Distillate about a 5 million barrel draw. Propane, propylene down about 8, and then other oils down about 7. Those are heating stuff. Distillate is a fuel. Jeff Curry on Bloomberg this morning on Trump oil. It says OPEC is already planning on increasing output in April. Russia-Iran sanctions have taken out 1.5 million barrels per day. There is some redirection. But we are losing oil, and you can already see it in the time spreads. Possible sanctions on Canada, he does not think will happen. There's more than enough room for OPEC to bring on supply come April as they are planning. On AI power demand, he says energy demand for artificial intelligence is yet to come as markets weigh The implications of the global race for AI supremacy. Even 2 to 3% of growth in power demand in Europe and the US is enough to start to create a serious problem. And there's an interview down here if you guys want to watch that. U.S. commercial petroleum inventories fell by a whopping 14 million barrels, the largest since last September. Draws were driven by diesel, propane, and other oils. But crude stock built 3.5 million barrels for the first time since November, and gasoline plus 3 continues to rise. But we're on the lower end. We're on the lower end. This is crude of all of these charts. We are below the 5-year average on all of them. Build going on. We'll skip through that. I just talked about that. This week is the perfect example why the EIA weekly U.S. oil production figure is useless. The EIA estimated only a drop of 237,000 barrels per day due to cold weather. But the reality showed something closer to 12.5 million barrels per day or minus 800,000 barrels per day. Thankfully, our production tracker picks that up. And there's the oil production tracking falling of oil production. Here's Grady. He says silver is now trying to break out of the blue bullish falling wedge Fed day to day. We are. We're ready to break out of here and get moving. So you got to watch silver. Coming down, this is not what an oil bear market looks like, where you have no inventory levels in 2025 down here towards the lows of the five. This is the lowest of the five. Well, he's got that back to 2016, 8 years. 8 years is the lowest that we've got, and we've got a very cheap oil price right now, incredibly cheap in relationship to gold. Wheat is ready to rise. Bet on dough to make dough. The grain train is leaving the station. Bullish divergence here for the RSI, and we are ready to go higher on wheat futures. Charlie says the first rule of fishing is to fish where the fish are. The second rule of fishing is don't forget rule number 1. And in investing, it's the same thing. Silver's unleashed, full breakout mode. Next stop, $40+ in his opinion. Bullish momentum levels starting to turn higher. Silver's looking good. Let's see if we can get some momentum built. Triangle Investor talking about uranium here. All of you dumping uranium stocks, can you explain to me what the heck DeepSeek AI has to do with the uranium supply demand picture? Actually, any AI, since it's not in any model, this and SMRs are only bonuses. Keep that in mind. Well, the uranium sector sometimes follows the NASDAQ or tech stocks, and sometimes it also follows, at least history, it follows the other commodity sectors. And all commodity sectors go up together. It's money flows. So money flows coming in or going out of uranium stocks is the same as any other sector. And that day, money was flowing out. So that is my answer there. Multifamily madness. I don't know how the average family survives off of $100,000 today. Between insurance, health, auto, home, groceries, property taxes, vehicle prices, utilities, and everything else the average person spends money on a daily basis, I've come to the conclusion that they don't. Well, I will say that it would be very rough to live off 100 grand and save money and do all the things. Like, it is really expensive out there. Totally agree. Global commercial flights to the moon, Demand is absolutely higher for commercial flights around the world. Investment wisdom. Let's read this. It's in the nature of stock markets to go way down from time to time. There's no system to avoid bad markets. You can't do it unless you try to time the market, which is a seriously dumb thing to do. Conservative investing with steady savings without expecting miracles is the way to go, says Charlie Munger. I agree with that. I don't think that you can time the market as what to the degree that people think they can. No one has been able to do it successfully multiple times. And the reason you have to do it multiple times is because the people who have done it, and there will be some people who do it, but we don't know if it's attributed to luck or skill. Almost everyone, it's been due to luck, and they haven't been able to replicate it. Silver chartist with platinum approaching a major inflection point. Platinum is fast approaching the apex point of a multi-year triangle pattern, and a major breakout appears likely in 2025. I agree. We are getting close to a potential large breakout. Morgan Housel says everything has a price, but not all prices appear on labels. Volatility is the price of admission. The prize inside is superior long-term returns. Crude oil seasonality. It usually bottoms in February and heads on higher all the way till about September, October. That's what I like, baby. That's where we're going. Fed's the bottom. So we're coming up potentially to a bottom here at some point. And that's what I've got for today, guys. So I'm going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Discounts the coupon code. And we do have a question and answer session coming up Saturday, 7 a.m. Mountain Time. We'll see you there. We're going to cover some natural gas fundamentals, oil charts that I've got that show some other fundamentals, and then we can hit your questions up there. So we'll see you there. Catch you next time. This is Finding Value.